Thank you. Anil Desai.
Thank you, Deputy Chairman, sir. I rise to speak on the Goods and Services Tax Bill 2015. Sir, Honorable Finance Minister has tabled a historic bill for its passage in this August House. The bill which will transform the economic scenario in the country. It is termed to be a game-changer reform in the indirect tax structure of the nation. So, as of now, the multiplicity of taxes at the state and central levels has resulted in complex indirect structure with hidden cost for the trade and industry. As a matter of fact, there is no uniformity in taxes, in tax rates and the structures across the states. There is tax on tax. In fact, no credit of excise duty or service tax paid at the stage of manufacturing is available to the traders while paying state-level taxes like sales tax or VAT. Moreover, no credit of state tax paid in one state could be availed of in other state. Consequently, the prices of goods and services are artificially inflated, and resultantly, the common man or the consumer is affected. I hope with the enactment of GST bill, above stated complexities will be resolved to the satisfaction of all states. This Constitution 122nd Amendment Bill 2014 was passed by Lok Sabha on 6th May 2015, and the said bill on a motion moved by the Honorable Finance Minister was referred to the Select Committee for examination. The Select Committee submitted its report in the last monsoon session. I was also a member of that Select Committee. Select Committee, while framing the specific and general recommendations on the bill, has duly taken into consideration the suggestions made by the state governments, experts, and other stakeholders, and of course the Department of Revenue too. Many political parties had expressed their reservations on certain provisions in the bill, such as constitutional cap on the rate of GST, scrapping of 1% additional tax on interstate transactions to compensate manufacturing states, 100% compensation to the states for the loss of revenue in the first 5 years of GST implementation, and independent dispute resolution mechanism. While addressing these issues, NDA government promised to do away with 1% additional tax on interstate transactions to avoid cascading effects of taxation. As demanded by majority of the states, the NDA government should give more weightage to the state vis-a-vis center in dispute resolution mechanism. So with the GST on the scene, my state, Maharashtra, stands to lose around 14 to 15,000 crores of revenue. And I think our center is committed to make that loss of revenue to my state. So in this context, I would state that spirit of cooperative federalism need to be taken care, because with the introduction of the GST, most of the taxes and the rights of the states would be subsumed in the GST, and states won't be left with maneuvering room to generate their revenue elsewhere, or the rights which are existing now, they will be gone. So now I would like to highlight the issue of my Mumbai Municipal Corporation, the biggest urban local body in the country with a whopping budget of around 40,000 crores. With the implementation of the GST bill, entry 52 and 55 of the list 2 in the state list stands to be subsumed under the GST. The entry 52, which stands that taxes on entry of goods into local area for consumption, use or sale therein, and entry 55 stands for the taxes on advertisements other than the advertisements published in the newspapers. So Municipal Corporation of Greater Mumbai makes more than 7,000 crores annually out of octroi collection. Sir, in the year 2014-15, crude prices being low to the tune of 36%, and in the financial year 15-16, it fell by 32%. Otherwise, this revenue of 7,000 crores annually, which Mumbai Corporation worked out or made, would have been more than 8,000 crores or so. So with the implementation of GST, this revenue would be subsumed under the GST. Mumbai being a financial capital of India and capital of Maharashtra, and it's a world-renowned business hub. And so Mumbai, it is a fact that Mumbai has contributed every year by way of maximum revenue of taxes to the center, and hardly anything comes in return to to Mumbai. So despite it, out of this 7,000 crores which is saved or which comes by way of octroi is literally spent on developmental programs in the state of in the city of Mumbai. Basically today, Mumbai Corporation gives around 800 per person liter free water is there. 7,000 buses are plied on 400 routes in there. Education to all in different languages to poor people of the city. Health care is taken at affordable rates, and projects like Middle Vaitarna, which is a very big reservoir which is built by municipal corporation to take care of water shortage, and water shortage is not felt by the people of Mumbai. With the deletion of entry 52 and 55, there will be a severe dent on the finances of the corporation, and therefore it will adversely affect the development projects in the city. The development of the city would literally come to standstill, and which would reflect not only badly on the image of the Mumbai, but it will have ramifications for the state and for the country also. So Mumbai Corporation generates, sir, give me 2 minutes, sir.
Only 1 minute, only 1 minute.
So Mumbai Corporation generates octroi collection of rupees 17 crores a day, and that amount is spent on a regular basis on various expenditure accounts and other overheads. So Honorable Finance Minister should ensure that Mumbai Municipal Corporation is compensated towards revenue loss of octroi with an annual accretion of around 10% towards the buoyancy in taxes. The Honorable FM should also ensure that the quantum of amount due to corporation should not be going to the state corpus. There has to be a distinct provision in the GST legislation itself in regard to the funds earmarked for the Mumbai Corporation, and the said funds need to be devolved directly from centre to Mumbai Municipal Corporation on monthly basis to enable the corporation to run its state of affairs very smoothly. Sir, lastly, last point I'm making. Sir, like recommendations, it is Honorable FM would put more light on that. Sir, like recommendations made by the 14th Finance Commission regarding devolving funds from the centre to direct Gram Sabha to take care of their developmental activities, and on their own they can develop. Okay. So unless this mechanism of direct transfer of funds, devolution of funds from centre to, sir, 1 second.
No, I have called your name, please.
So one second.
No, please.
So I'm making a last point, sir. I'm making a last point. So unless this mechanism of direct transfer of devolution of funds from centre to Mumbai Corporation is not made, or it is not coming in the legislation itself, it will be a very bad situation, and the corporation, which is cash-rich as of date, will have to go with the breaking balls at the to the center state, and without that, I mean, entire activity of the corporation.
I have called your name thrice.
So I urge
to switch over to other
Finance Minister to take care
if you don't speak, I will switch over to other
speakers,
please.